Okay, so we're just about at 2 o'clock, so I'm just going to kick off this webinar on behalf of the Digital Pound Foundation. My name's Helen Disney, I'm a director at the Realisation Group, and we're delighted to be hosting this session on behalf of the foundation to look at digital money, global markets and the coming revolution in cross-border settlement. Digital Pound Foundation is a non-profit foundation that was launched towards the end of 2021 to look at the prospects for creation of a digital pound in the UK and to make sure that that is well designed and well implemented, but as well as being interested in the digital pound in the UK, the foundation is also interested globally in the progress of central bank digital currencies and new forms of digital money. And so part of why we're having this session today is actually to look at what's happening internationally and what kind of cooperations are that could enhance the marketplace. So we're really delighted to have a great lineup of people with us here today who are all experts in the field. We're going to kick off initially with a keynote presentation from two members of Accenture's digital currencies team. And then we're going to have a panel session moderated by Jana Pache, who's an originating member of the foundation as well as their policy lead. And then we'll have hopefully a decent amount of time for Q&A at the end for all of you to hopefully ask and get some of your questions on this topic answered. So I'm going to start off by introducing our first two speakers who are going to give the keynote presentation. We have with us, very lucky to have with us, John Velisarios and also Dr. Usman Mandeng, who are both, as I said, part of the digital currencies team at Accenture and have been involved in Project Jura, which was referenced in our webinar description as a project that's trying to test out and see what can actually be achieved in terms of cross-border settlement of digital assets and foreign exchange transactions. And it was a collaborative project with a number of different organisations. So I'm going to hand the mic over now to John and Usman to kick us off before we go into our panel discussion a bit later on.
Thank you, Helen. It's great to be here. My name is John Velisarios, and I lead up our digital currency team here at Accenture together with Usman. We've been working in this area now for a number of years, and our focus has been on helping sort of central banks implement the central bank digital currency projects, as well as working with commercial banks in the space to adopt a new format of money. Our role, I guess, in all of this is we've been very active in this area for a number of years. We've worked with many central banks around the world. Our projects range from work that we did in Canada to Singapore, through to the Riksbank e-krona project in Sweden, and also sort of the Project Jura as well. There are many others as well that we've been involved in and driving development of. I'm not sure if I see the slides, but we do have a couple of slides there we go. Yeah, the future of money. If you go to the next slide, and I think the following one after that. And maybe Usman, you want to introduce yourself first, and then I'll go into the
no need. No, hello. I'm happy to be here. I focus mostly on the factors for adoption and dissemination of digital currencies. I'm delighted to contribute here to the debate.
Yeah, thank you. So just a quick sort of introduction on the amount of activity, I think, over the last couple of years. And also the work that we've been doing in helping drive that as well. So as I mentioned before, from the engagements that we talked about from Canada to Singapore to Sweden and so on, we've also seen two different types of engagements that we've been directly involved in. The first one is in sort of research-oriented and experimentation projects, and other ones that are much more towards the implementation. And what we see, I think, is that more and more are tipping towards implementation, which is really cool, because of course that means that there's a broader adoption of this new innovation in the marketplace. Project Jura is exactly one of those where we've been looking at how do we sort of focus on looking at real transactions, real issuance of financial instruments with central banks in multiple jurisdictions. And all of the innovation that will help drive. So I'm going to stop there. I'll pause there. I'll pass over to Usman. I think we have some other slides that you want to talk through as well.
Yeah, no, thank you very much. So yeah, Project Jura, to be sort of, to serve you as an example of what is it really that we want to change to improve international payments. And I think that has been the underlying ambition of the project. There is a policy consensus that international payments need improvement in order to facilitate orderly international financial integration. And what Project Jura has done is really completely change the architecture of how international payments can be conducted. So the way we've done it, and I'm not sure if is there the next slide maybe on there.
Yep.
Just to illustrate what we have done and to give you some pointers. So the idea is that we had with the Central Bank of France and the Central Bank of Switzerland, both had issued a euro and a Swiss franc CBDC respectively on a platform run by SDX in Switzerland. Part of that project, we've also issued a commercial paper on blockchain in France that was then mirrored on the same platform run by SDX. And the idea was then, we had 3 tokens on that platform, a Euro CBDC, a Swiss franc CBDC, and this commercial paper. And then we were able to do sort of what is called atomic exchanges or swaps between these different tokens. And one important aspect is we allowed for Swiss banks to take delivery directly of the Euro CBDC, and for the French bank to take delivery of the Swiss franc CBDC. Now, on the FX side, that has allowed us for the first time to do an exchange, foreign exchange transaction in central bank money outright. Not using the prevailing correspondent bank model, but to allow central bank money to serve as settlement medium for an international transaction. And that's quite significant because it is the aim is to extend the safety that central bank money currently provides only for domestic transactions to the international sphere, and thereby help to allow international payments to be afforded the same conditions and safety as domestic transactions. And then we did also a delivery versus payment transaction by which a Swiss bank would use a Euro CBDC in order to purchase the commercial paper, again in an atomic transaction between a Swiss bank and a French bank. And then we also had an offshore delivery versus payment transaction by which a Swiss bank would sell the commercial paper to another Swiss bank and again settle in Euro CBDC. So we have changed what you could call the geography of central bank money by extending beyond its usual national borders and really create an environment where the transacting parties would act as if they were, in a single jurisdiction, and that I think is really the key to understanding the advancement that was made with that project.
And Usman, can I ask maybe just for I know we only have maybe about a minute or so in the intro, but why is that significant? Is it because it's the first time, it feels like it was the first time that's ever been done where we've actually taken central bank money from one jurisdiction and used it to settle in another one? I mean, can you elaborate a little bit more why that's significant?
That's right. So central bank money is very local, right? Bank notes are issued only to domestic banks, and large value payments, which are typically done in the large value payment systems, which are owned and operated by central banks, typically only allow domestic members to take place, which means central bank money cannot be used across border. So it is significant because the advantages of using central bank money therefore only accrue to domestic agents. If we can expand that, we create an environment in which international and domestic have similar conditions for accessing what is the highest quality of money, and therefore give confidence to the settlement that currently is only restricted to domestic agents.
Do we pause there? I guess I think for an introduction, I think just to give a short introduction to Project Jura, and then maybe we move to the next section.
Thank you so much to both of you. It's really amazing to see how much this is becoming a real world situation now, and real things are being tried out. It wasn't that long ago that people were just talking about CBDC as a sort of theoretical thing, and I think now we're just seeing so much activity and so much trying out of real world projects and prototypes. So it's really, really interesting. I'm sure people are going to have a lot of questions, and hopefully we can incorporate that as part of the question and answer session as we carry on. For the moment, though, we're going to move on to our panel discussion. I'm going to introduce Jana Pache, who, as I already mentioned, is policy lead for the Digital Pound Foundation, as well as one of the originating members. We've got a fantastic panel, including two of our Digital Pound Foundation members, Ripple and Quant, as well as guest speakers from SDX and RTGS Global. So I'm going to now hand to Jana to formally introduce the panel discussion.
Thank you, Helen, and thank you very much to everyone who's joined today. We're very excited about this webinar. During our prep session, the conversation became quite animated, so hopefully some of that will carry across to the live webinar as well. Before we get started, I just want to go around and ask our panel to very briefly introduce themselves. And I will go around clockwise on my screen as I can see it. So Dave, would you like to introduce yourself first?
Sure. Good morning, good afternoon, good evening, everybody. Pleasure to be here. My name's Dave Sisson, CEO of RTGS Global. We are a brand new financial market infrastructure. We've been building our service, if you like, for the last 2.5 years with Microsoft, and this is possibly our launch year that we now will enable cross-border payments to take place in central bank funds. And unlike some of my esteemed colleagues, we do not use blockchain, and we do not have a tokenized asset in between. So we've come up with a different way of solving the global problem of cross-border friction and cost and latency. So yeah, it's a pleasure to be here today, and I'm sure my views will be slightly different to some of the others. So look forward to the discussion.
And it's always good to have some diversity of opinion, and a little bit of healthy conflict as well. So James, how about you?
Yeah, thanks, Jana. It's a pleasure to be here with you all today, and thanks to all the audience for joining. My name's James Wallace. I work at Ripple. I lead our engagements with central banks and our work around digital currencies, including CBDCs. Just very briefly on Ripple, for those of you that don't know the company, we really focused in two areas. One is we have a Ripple Net, which is a cross-border payments network, which has a feature that enables you to basically miss out the correspondent banking model by using cryptocurrency as a bridge currency. And then we have another side of our business working on new initiatives around developing solutions on the XRP ledger. The key thing here for me around CBDCs, I'm going to love the discussion with Dave and others, I think it's going to be great, is getting to this world, frictionless world, right? This internet of value where money, whether it be corporate money or central bank money or private individuals' money, can move around the world as easy as you can move data. So looking forward to the discussion. Thanks, James. MATHIAS.
Thank you, Jana, and hello, everyone. My name is MATHIAS SCHUDAK. I'm working at SDX and part of the management team, and I'm driving and leading the CBDC-related initiatives we have conducted in the past 2 years together with the Swiss National Bank and also with BDF. So the Project Jura we were talking before. Very quickly about SDX. SDX is a Swiss-based, fully regulated or fully FMI-regulated digital exchange for trading, settling, and also custody of digital assets, of security tokens. And we have received our licenses last year for stock exchange and CSD, and we started operations in November last year when issuing the first digital bond on our exchange. I'm excited about the coming webinar and the discussion having with the colleagues here. Thanks, MATHIAS. And Gilbert.
Thank you, Jenna. Hi, good afternoon, good morning, and hello, everyone. Great to be here. My name is Gilbert Bird, CEO at Quant. Quant, as a background, we're an interoperability enterprise technology. We help organizations get the best of all the different types of DLTs through our API. And what we're allowing is creating an interoperable ecosystem so everyone can have cross-border, cross-network, and different types of transactions done seamlessly and easily with our overledger technology.
Thanks, Gilbert. So during our prep session, we discussed a number of aspects of digital money in terms of both CBDCs and stablecoins, and I wanted to unpack some of those definitions and some of these sometimes contrasting concepts throughout this discussion. And to start off with, we have seen lots of work in the central bank digital currency space, but of course this was mostly spurred on and incentivized first from the sort of grandparents of all stable coins, which was Facebook, then Libra, which no longer exists. And it was this prospect of a systemically important, potentially systemically important and widely used form of privately issued money as such that kind of incentivized central banks to look into the prospect of central bank digital currency themselves. At the Digital Pound Foundation, we advocate for the development of a digital pound, but we very much see that consisting of both private sector and public sector solutions, so both CBDCs and private forms of digital money. And I wanted to start off with by getting the panel's views on this distinction between privately issued stablecoins and other private digital money and CBDCs. So why CBDCs? Why are CBDCs more important and necessary? And maybe we can start with you, Matthias, given that CBDCs are an important foundation of the future of digital asset markets. Why is central bank money important?
Yeah, I think there is a very straightforward answer because it lies in the quality of the money. So CBDC is a liability towards a central bank, so it's the highest quality of money. And with a stable coin or with a commercial bank money, it's always the counterparty risk towards the issuer. And a little bit more broader, I mean, STX went live, as I said, last year. And one of the novel features we do offer on our platform is the so-called atomic trading and settlement feature. And that means that the asset and the cash leg in a DVP manner are being settled atomically in our platform. That requires that both the asset leg as well as the cash leg are available in tokenized form. And for that purpose, we don't have only digital assets in our platform, we also have tokenized cash. And we have done that in a, I would say, in a very elegant or smart way. So we have been able to tokenize cash, which is held at the current RTGS system. So we have actually tokenized commercial bank money, which is backed by central bank reserves, so the so-called synthetic CBDC. And as you just said, Jenna, I think for us and for the involvement of the ecosystem, it's important that we have the same level playing field and like a CBDC or central bank money to settle digital assets in order to ensure also stable for financial stability, I want to say.
Thanks, Matthias. Does anyone else want to comment on that?
I want to comment quickly. I think you mentioned private monies and official monies, and I think we need to be clear that most monies already are private. Monies are typically liabilities of the banking system, and banks are run private entities. So there's nothing, how to say, improper about private monies. It's the rule is private money, and central bank money plays only a very small role. Typically, it is to serve where the highest quality money matters, and that's for large volume payments. Hence, for security settlement and foreign exchange, this is where central bank money is really important because it takes risk out of settlement. But it is perfectly normal, and we live in a world of a continuum of monies, that we have private monies coexisting with official monies. I think that's quite important. And now, if we think about stable coins or tokenized money, well, it would just be these private monies made available in a different format. That's all what this is. All in quotation mark what this is.
Thanks, Usman. And Dave, I think you see a different future than digital money altogether, don't you?
I do agree with some of the principles there from Matthias, though. Central bank money, M0, it's the highest quality asset one can get. When you start looking at the world of cross-border transactions, all of a sudden you've now got risk-weighted assets on the balance sheet if it's in commercial bank money. So preserving that quality and keeping everything in central bank, let's say backed central bank assets, it really does give you that massive benefit, and it will make it cheaper for the banks to transact in due course because it's less risk. We deal in fiat, so we are looking at the actual central bank reserves arguably they're digitized because we too enable an atomic settlement to transact between two central bank reserved pledges to our network. So we operate a network where we enable atomic settlement of value. We can see a world where maybe it's not just cash, but value versus value, such that commodities could perhaps be settled in the future. So we've gone back to what works today and reserve accounts and fiat currency, and we've looked to plumb into that, if you like. So the settlement that takes place on our network is all backed by fiat currency. That brings with it a real benefit, though, where you start looking at some of the innovation around CBDC, because around this interoperability that we'll probably get to talk about today, being able to flick in and out of fiat into digital currencies is going to be something that's really necessary. So we've tried to forward plan that into our offering as well, with the general acceptance that CBDCs are on the way. So yeah, we've preserved some of MATHIAS's sort of foundational principles, that it's the highest quality, but preparedness for central bank digital currency.
Thanks, Dave. And I think another important kind of definitional aspect of CBDC that we need to look at is the distinction between wholesale versus retail, or whether in fact there is a distinction to be made. So in today's kind of payments infrastructure, we have wholesale infrastructure and retail infrastructure. And we also have, and although there is some crossover between the two, I'm not an expert in payments infrastructure, so I will ask you all to expand on that. But we also, when we think about the types of use cases that payments or that digital money can be used for, we naturally categorize them into wholesale use cases, which are those that apply to participants in the financial system, and retail use cases, which apply to, which involve participants outside the financial system, so business to business, business to consumer, etc. Now, is that a distinction that should be preserved going forward when we look at the development of CBDCs? Is it an important distinction going forward, or do we think that distinction will become more blurred? What's happening in that space, and how is it being handled in other situations around the world?
Maybe I'll
into anyone.
Yeah, no, I think I'll start, and I'm sure others will chime in as well. But I think there's a starting point. I think with the whole sort of topic, with specifically in every jurisdiction in which we've been sort of discussing this, CBDC initiatives and so on. Sometimes we start in the retail space and we quickly sort of see that there's a lot of applications in wholesale. Sometimes it'll spill over into cross-border and so on. And I think what we typically sort of see, there's maybe the distinction isn't the best one, and maybe there's more of a sort of a need to look at general purpose, application for a general purpose digital currency used across the board for both retail and wholesale applications, and versus sort of a very specific focus either in the wholesale space or in the retail space, because at the end it's really difficult to make that kind of distinction purely from just the kind of applications that we see. There are central banks that have initiated projects where the focus has been exclusively on the retail space. They've been trying to address a retail problem and challenge initially because of either declining use of cash or other type of jurisdictional or environmental reasons or ecosystem reasons. But you can see the application. Once you've implemented a retail CBDC, you can quickly use it in commercial applications and wholesale applications afterwards as well. So maybe it's slightly different usage of it, but at the end, this is money, central bank money, highest grade of money, and why only restrict it for retail usage? And I think in some places the retail problem is not the biggest problem to solve, right? At the end, I think there's a lot more in other areas. It's difficult for consumers as well to understand the difference between central bank money and commercial bank money, and isn't money all the same at the end for them? So you have to educate them in the process, and I think that also clouds the sort of the debate and the discussion around that topic. But I think we categorize them in those areas, I think, for convenience, but I think over time we will see a convergence of a lot of those distinctions that we've made early on.
Thanks, John. And James and Dave, I know in the prep session you both had somewhat differing views on this topic. So shall we go with James first? What are your thoughts on the retail versus wholesale distinction?
Yeah, thanks, Jen. We'll keep it under control here. I think I'd largely agree with what John was saying. I think the key here is use cases. What is the money being used for, right? And why would someone use a CBDC versus the stablecoin or fiat, right? I do agree that interoperability between fiat and digital is a critical thing moving forward. We tend to look at it as more of a general purpose CBDC. To give you an example, the project that we're running in Bhutan in Asia is in old-fashioned terminology is wholesale, CBDC, and retail and cross-border, right? So it's one platform that's being developed that is a multi-purpose platform. So the use cases, I think, there's a wholesale use cases, which is the central bank mints the tokens and distributes them to the commercial banks, and they can be used within the commercial banks for interbank settlement. The commercial banks then distribute to the end users as an example, as an alternative to cash. And then there's also a cross-border element as well. So I'm sort of definitely moving more towards the general purpose view, and it's all about the use cases, and many use cases I think straddle both what you might traditionally call wholesale and retail. Thanks,
James. And your thoughts, Dave?
Yeah, I'd actually agree with a lot with James there. Actually, I think specific use cases will drive the specific change. We're very focused where we are on the wholesale market, and very much on solving cross-border friction. The advent of CBDCs, it does bring some challenges to that, and I look forward to following up actually and reading more about the Jura conclusions, because it does pose new questions for central banks. So inbound payments coming from another currency into a jurisdiction. Actually gaining access to central bank accounts for not local banks within those jurisdictions as well is another new concept that central banks will need to consider. So there's quite a lot of new concepts. It's not just a case of a jurisdictional challenge, but when you start to look at operating with other currencies that may or may not use blockchain, that may have a retail but not a wholesale, all of a sudden you've got all of these different hybrid ways of working. And that's where the challenges will actually come in. How do you integrate some of these at different stages of their maturity? So in principle, I agree. I think the use cases will be different and varied around the world, and they will be what drives the uptake.
Thanks, Dave. And that, I think, leads us nicely onto the topic of interoperability as well. So obviously, in the case of Project Jura, it was all about testing cross-border settlement, but and there are potentially many benefits to global payments and settlement that can be introduced through central bank digital currency and through digital money more generally. But everyone is kind of off in their own bubbles, designing a way for their own CBDC, and there's a question of how these will all interoperate with each other, and how we can create bridges between them. At what level will they be interoperable? Will it be a technical level or a logical level? Will we have, at what level will those bridges be created? And then again, I suppose it's not only a question of interoperability between new CBDCs, but also CBDCs will not signal the end of the existing payments infrastructures that we have. So how will CBDCs coexist and interoperate with existing payments infrastructure as well? So Gilbert, what are your thoughts on the thorny questions of interoperability and how that can work in future, and how we can avoid, instead of opening up access between jurisdictions, having more open access, closing off access instead?
Thank you, Jenna. I think it's a very good question and a topical one, because it's one of the areas that needs looking at and solving today, so it's ready for tomorrow, because interoperability is one of the key components of mainstream use, and it is quite broad. So I think the first thing is, the global financial system works. We're not here to turn it off and start again. I think one of the things we need to consider is interoperating and integrating the existing financial systems and the RTGS systems, settlement systems, banking systems that we have in place to be able to work with DLT and blockchain type of payment systems. So the first thing is, let's extend the capabilities of our existing financial system to be able to talk decentralization, blockchain, and DLT to have better use cases and help with that evolution of money. The other consideration we need to look at is, if we're going to do that, and especially with the wholesale versus retail scenario, security is quite important, because national payment systems are deemed national critical infrastructure. I mean, they're critical to running economies. If they collapse, we have huge impact to countries. So what we do today in payment systems need to also evolve to help with digital assets, CBDCs, and DLT types of payment systems as well. And then finally, when we're creating a digital asset as a CBDC, with every other technology before us, we haven't all used the same version as everyone else. Everyone needs flexibility, everyone needs an agnostic approach to it. And so we need to allow participants to the interbank network, which is usually going to be the wholesale interbank network, to bring their own DLT, which are the commercial banks, and for them to run digital assets in terms of wholesale or retail CBDCs that can work across the different types of technology stacks, but also across the different types of borders as well. So doing all of this is quite complex, and a good way to go ahead as an industry is to create standards and follow that and work together. I think there's a great and enormous opportunity to transform the financial system. It doesn't come often; it's every 30 years or so, and having standards-based approach is kind of a right way to allow everyone to bring the best of their expertise around governance, legal, cybersecurity, technology, etc. So we can all have standards that can actually work for the technology that we're building together.
Thanks, Gilbert. And so you've talked more, I think, about the technical side of interoperability, whereas James, I think at Ripple, as I understand it, you're looking at more sort of logical interoperability and how you can use cryptocurrencies, for example, as a bridge between different CBDCs. Can you talk a little bit more about that? And also whether you see that as sitting alongside the type of technical interoperability that Gilbert was discussing, or whether it's a different concept altogether.
Yeah, thanks, Jenna. Yeah, I think interoperability as a term is sort of very widely used, and there's different sort of definitions. So, to my mind, there's sort of three pieces to it. There's the technical interoperability. There's the, as Gilbert mentioned, the integration with the old world, I'll call it, right, with the existing payment schemes and standards. And then there's the policy, the rules of the road, interoperability, between different jurisdictions. As it comes to, cross-border, one of the things that we're working on and have implemented is running live is using a cryptocurrency as a bridge currency. Right, so you can, on our RippleNet solution, you can start off with fiat in one country and then send to another country using, in this case XRP, but it could be a stable coin or any other digital asset from one place to another. Basically instantaneously and at low cost. So it is somewhat of a technical integration. I think there's a lot more work that's going on across the industry, and we're really happy to collaborate with other companies on this around trying to get to some form of standards on interoperability. I think that'll definitely need to come in the end. In the meantime, there's a lot of lessons to be learned from the crypto world, right? There are people making massive transactions all the time, all around the world, using that technology. There's obviously a whole regulatory angle in there as well. And so one of the things that we typically work very closely with central banks and regulators on the implementations in those particular countries. So I think it's a complex one, but it's definitely the technology works, right? I mean, I think the challenging part, to my mind, is more around getting agreements between different jurisdictions and the policy side.
Thanks, James. And going back to Project Jura, I think in terms of the cross-border aspects, there are so many challenges when it comes to the implementation of CBDCs. I mean, even in just one jurisdiction, you've got the not only building the technology, but ensuring that the design is to some extent future-proof, rolling it out, testing it at the scales at which central banks operate, and ensuring that the legal and regulatory framework is fit for purpose as well. And then when you look at multi-CBDC systems or at cross-border CBDC settlements, this becomes even more complex. And I think one of the interesting points about Project Jura in terms of its significance was that it was conducted entirely within the constraints of the existing legal and regulatory systems. And MATHIAS, I was wondering if you could tell us a little bit more about how that worked in practice, because for two central banks to basically expose counterparties in each other's jurisdictions to central bank money and to place that level of trust in a third party is quite huge. So how was that achieved? And also, what does it mean for the future of cross-border wholesale CBDC transactions and the way central banks relate with each other?
To do so, I think there have been multiple questions. I'm going to start with how could we provide the confidence, the trust to different regulators or central banks, trusting a third party to actually operate the underlying network. I think taking one step back, I think what has been unique is SCX has gone live last year, and we have taken the system which is live as a basis, but that's a rather Swiss-based system which is capable to operate a security settlement system and also a payment system on the same platform. And we have enhanced that system to more an international to an international extent by deploying an additional network on that network. So deploying an additional payment system onto the existing infrastructure. So in the end, we had one single DLT system, which was operating multiple sub-network. And now to the question, how could we actually convince them, or mainly convince the central banks that they trust a third party, we had to prove them that they have sufficient control mechanism. So one of these control mechanisms we provided to the two central banks was that we have deployed their issuance, so their CBDC issuance nodes in their respective jurisdiction. So, for example, the Banque de France, the node of Banque de France got deployed in France. And the second approach was then this novel dual notary signing functionality, which has been developed by Corda for the purpose of the experiment, which allowed each central bank to control each and every transaction. So each and every transaction which involved the respective currency has been signed off by the respective central bank. And then a further feature was actually the so-called whitelisting functionality. So each central bank had control who can have access and who can hold CBDC in their respective currency. And last but not least, they had a real-time monitoring capability to check each and every transaction on the platform where their currency was involved. So that's the setup, and with that setup, we could actually win the trust, the comfort from central banks that they have sufficient controls in place, that the third parties operating the infrastructure. And now an outlook, what does that mean for the future? I think we haven't solved all the challenges. The challenges have been mentioned by my colleagues. I mean, there are policy challenges. There is a need for coordination if we go the path of a single platform, which is much higher than what we see today. But I think one approach could be use case driven. There is not one fits all solution. So we're going to build a new global or international payment system for the future. approach might be step by step based on a dedicated use case. And maybe my last point to that, we discussed before interoperability, and I fully agree on the interoperability that this is a key requirement going forward. I think one of the, or different way around, Project Jura has gone a little bit a different way. We tried to actually deploy a network on one single infrastructure and avoiding or getting out of the friction of the need of interoperability. We had interfacing to the traditional RTGS system for on and off ramping of the fiat side, but then each and every commercial bank had direct access to wholesale CBDC and digital assets on their nodes.
Thanks, Matthias.
If I may add, because I think what Jura interoperability is a tall order, and I think it's important to remind ourselves, money today is not interoperable, right? For cash, we operate a completely separate network, and bank money is never interoperable. The only thing banks do is exchange messages so that they can adjust their account. So it's new what we are doing when we try to make money interoperable. And in Jura, it's not, you shouldn't think of it, token, switching networks. In Jura, what we've tried is the migration of control by affording banks, the central bank, sufficient control of their currency circulating in a third jurisdiction on a privately operated platform. We do not need interoperability in the narrow sense, but we can sort of allow for the reallocation of control so that we solve interoperability by basically allowing control to change. And another approach important in Jura we did is by issuing on one platform and then reissuing on another platform, this reissuance, we also built the notion that interoperability could also be about reissuing something, very flexibly, and thereby making it available, be it an asset, a currency, on different platforms. So to the extent that this token issued on one platform is fungible with that issued on another, we effectively also create interoperability. So Jura provides, in that sense, two important approaches to the notion of interoperability.
Thanks, Usman. And I think that's a really important point that you raised, that actually the money we use today is not interoperable. And there's interoperability as well in terms of technical interoperability, which is between the systems on which money is transferred, and also market access interoperability, which today is facilitated by the correspondent banking system, which introduces its own issues and latencies and things like that. Dave, I can see you unmuted there, and Gilbert, you've unmuted too. So let's hear from the two of you in that order then. Dave, you go first.
Yeah, I was going to pick up on something that Gilbert touched on a moment ago. When you start going down the road of interoperability, it's not just the technology challenge or a standards challenge. It's then you're by the very design of the system making something more systemic than it was the day before. And as we start to interoperate cross-border, the world of financial market infrastructures keeps on coming to the front of my mind. So you do need to have strong adherence to the principles that are set out for deploying something so systemic in its nature. And Gilbert was talking about critical infrastructures, and I think exactly that, but on a global scale. So I do think it's not just a fintech challenge, because at the end of the day, we need to ensure that there's safety and soundness as we start to join these things together. So I think that's a really big point. We quite often get carried away with the technology and proving technology, but then when it comes to implementation of these concepts, the legal framework to support it, the safety, soundness, resilience, all of these great things that we're used to in our own jurisdictional ways today, we will need to experience on a global nature, and that's a significant undertaking as well.
Thanks, Dave. Gilbert.
Yeah, great. Agree with you, Dave. Completely right there. I think one of the use cases I can talk about is a form of interoperability that we've implemented in Latin America. So this is an interbank network for cross-border across the continent of Latin America, and then connecting Latin America to the US for a payment corridor there. So what we've done is, working with the 12 countries, is allowed every commercial bank to hold their own DLT and have the relationship with their own customers. So all the onboarding, KYC, fraud, risk, etc., the relationship is still held with the commercial banks. What we didn't want to do is force every commercial bank to transform and adopt a single type of DLT because they've already got one, or they don't want to, they've invested. And then what we've done is allow that agnostic approach to connect to each other on a settlement layer between the banks as an interbank network. And that's agnostic to the underlying interoperable digital asset on the commercial bank side. So this then settles at the top layer with the CBDC, so with the central bank RTGS system, which is a wholesale CBDC. So this system allows the use of different types of technology, making it interoperable, but it just makes it cross-border from day one. And we've seen this work, which is what we've been doing for the last year, and it's going into production in 2023 in Latin America for Blackchain. This has been quite a successful test that's going into production, because it's actually given the ability to have a cross-border Latin American dollar for the countries who are already connected to the network, and they're just reusing their existing infrastructure, their existing DLTs, and they're holding the relationship with their customers. Because we've seen a lot of central banks tell us they don't want a citizen to call them to say, "Where's my £10 transfer?" Because they're not geared up. They're not geared up to be running the relationship with like commercial banks with their own customers. They want to run the wholesale, the settlement, the policy, etc., and RTGS.
Absolutely, yeah. So I have a final question for all of you, but what I'll do is circle back at the end on that. And in the meanwhile, let's start going through some of the questions that have been coming through from the audience. So we had a question about, and I think this is bringing things back home to the Digital Pound Foundation and to our partners, the Digital Euro Foundation, some of which are on this call today. There was a question about whether the digital pound and the digital euro, which don't yet exist, can stay relevant when other jurisdictions, China in particular, are moving so fast and taking such huge leaps in this area. And certainly when I look at things like, there's a brilliant demo on YouTube of China's digital wallet system and how it works and things like that. And that streaks ahead of anything we've got here. In fact, we don't have anything here just yet. So to all, to any of you who want to answer that, how do we remain relevant in this global race and global competition? And is there a potential that the international global landscape is going to change as a result of this shift in currency power based on the functionality of currency in the future?
Yeah, I'll jump in on this one. This is a great topic. We've got to move faster, right? I think is the bottom line. I think there's certainly a lot of concern in the US around the potential of what's happening in China, which is a great initiative, but the potential of a threat to the US as the reserve currency around the world. I think in Japan and in Europe and the UK, it's the same challenge, right? So there's two ways in my mind you can remain relevant, right? One is you can actually innovate and get on with it, right, and build something that's suits the needs of your market, right, and is as relevant around the world. Or the other is you can sort of put up barriers and try and protect yourself, right? Well, I don't like the second one. I think there's a little bit of the second one is being discussed in some jurisdictions. I'm not going to name names, but there's sort of like denial of what's going on in the world. So my view would be, stop studying and start working.
Yeah, I'd like to add to that as well. I think at the end, just because others have done it first doesn't mean you can't learn from what they have actually implemented and pick and choose the best solutions and the best approaches that have been rolled out. I think it's also a very good position to be in because you're learning from their experiences and what may have worked and what may not have. So I think there's plenty of research that's been happening over the many years. There's piles of it every other week. Every week there's at least one or two reports that come out. A lot of experimentation, a lot of lessons learned, and also implementations as well. And as we've been sort of seeing in the last short while, and I think that just gives more power to and more knowledge and more resources to those that are planning for these things and to just get going. I think at the end of the day.
Thanks.
Yeah.
Sorry, go ahead.
I was just saying, I think, this is the evolution of money, and it gives us central banks an opportunity to create what will eventually be the future infrastructure of money. And there is a lot out there, and the BIS has reports saying 80% of central banks are looking at this today. So I think once CBDCs are mainstream, it won't be a complete big bang switch over to CBDCs. It will be an evolution and a gradual shift to transition to CBDC type of money. So the geopolitical play will be the same, I think, with or without CBDCs, but it'll just be in a new format.
Okay. And security is a question that's coming up quite a lot as well in the Q&A, different aspects of security, I guess, in terms of building secure quantum encryption proof security in the future for CBDC, and also security in terms of cross-border transactions as well, and implementing that. And we've had a few references to Russia and how we can ensure that, in the future, countries are not able to evade sanctions through loopholes in that kind of international interoperability or exchange system. Thoughts on security? And again, I'm going to start with Gilbert.
Yeah, I think, CBDCs will have the same security rigor and compliance as money. We need to enforce that and apply it to CBDCs. I think as an industry, quantum, it is an issue. It's not just for financial services, it's for everyone. But as encryption is broken, there's always new research and better forms of encryption that are created to counter what's been broken. So that will evolve to be quantum proof eventually, like every other technology we use today. It won't be just for financial services. And finally, on fraud, I think this is an opportunity to relook and rethink at fraud again, and using the technology and the features of CBDCs to tackle fraud once and for all. The current monetary system that we use, fraud happens and we resolve it after the fact. But I think there's an opportunity to really home in onto the source of fraud and prevent it happening at the transaction layer. So this is a great opportunity to really solve the huge fraud problem that we have today.
Okay. And we've had a couple of questions as well on the concept of atomic settlement. And I want to take up that opportunity to spark a little bit of debate, actually. So, Dave, you've mentioned that the RTGS global concept will basically enable atomic settlement, but through something that is not a CBDC or even a synthetic CBDC or any form of tokenized money. It will do so just through an enhanced payment infrastructure. MATHIAS, would Dave's RTGS global solution be sufficient for the needs of SDX when it comes to atomic settlement? And then I'll come back to you, Dave, for your response to that.
That's a good question, and I would say definitely yes. The question is, and at least my view, whether we're going to interface between different systems, or we try to bring the cash onto the ledger. And we have decided for the latter. We bring the cash onto the ledger to facilitate the atomic settlement. That's one element, the atomic settlement. I mean, the second element or potential benefit is the programmability of money, which will be allowed through business logic on DLT. So, but back to the question, yes, clearly that's a possibility, and we even looked into that possibility when we did conduct phase 1 of Helvetia with the Swiss National Bank. I think one learning, if I remember correct, it was possible. We do have a kind of a multilateral settlement capability, and we had difficulties to have a reserve function on the RGS system. So there are enhancements needed, at least from that perspective, towards our specific setup, but it is possible, yes.
Thanks. And so Dave, it sounds like your problem is, first of all, you're not on Ledger, which I don't think you see as a problem as such, and also that you're not offering programmability of money. So how would you respond to that? So
we're not blockchain because it's not quick enough for what we want to do. We wish to be able to settle cross-border globally at the volumes and values that currently are unserviced and frankly, the best technology for the job was not to have a blockchain DLT solution. So we've elected to choose the best technology for the problem rather than being led by technology in our solution. I guess secondly, we've looked at the problem slightly differently as well, because you just touched on about the performance of the actual local payment systems and RTGS accessibility in its local sense of the word. And we've decided not to plumb into the payment systems themselves, but more our participants get liquidity on our network by having central bank reserves, which are pledged legally to us. So we operate everything, and we don't integrate with any existing payment rails at all. Now, of course, when we move the money, we move all payment payloads, so everything goes together such that local domestic payments can be settled if the rails are open. But we've deliberately designed ourselves not with that limitation. So we've plumbed into a different part of the central bank fund, if you like. So not the payment system cash reserves, but more the actual central bank reserves at the next level down, actually.
Thanks, Dave. And I guess the key there is it's also based on existing central bank infrastructure.
Yeah.
So you're getting the same capabilities to some extent in terms of atomic settlement, but as CBDC would, but using existing infrastructure today.
We've had to almost go for sort of lowest common denominator. At the moment, every currency has got fiat. There are mixed stages of adoption of CBDC, and some will be more successful than others. Some will be retail, some will be wholesale. We've needed to come up with a solution where everyone can move, whether you're advanced down the CBDC road or whether you're not even contemplating it. You can connect to our network and settle cross-border atomically in real time. And we've had to create something globally that enables everyone to be included, rather than you have to be on a CBDC in order to get onto our rails. So we've designed it open for that reason.
Thanks, Dave.
Sorry. Could I just interject here? Because I think the innovation with CBDC is that we adopt a new format of money, the digital bearer instrument. And we are having the discussion because of the emergence of Bitcoin and potentially a Libra in the future, because they are blockchain based. There are obviously many solutions to do payments, right? But the innovation is the new medium. It's not to settle faster, see. And so I think it's important we keep that as our compass here. What we're trying to do is not looking for a solution to pay fast, in an international setting, but it is to mobilize a new format that can give us all sorts of new functionalities, many of which we may not even know today, to address future use cases, not known use cases. You see, I think it's important we keep that in mind.
Absolutely agree. And I had a final question to take round, but I think that some of you have already made some reference to it. It was about the ecosystem of digital money in the future. So instead of that, I'll just respond to Usman's comment now, because I think, again, from the Digital Pound Foundation's perspective, we have a very strong position when it comes to the potential of CBDC and new forms of digital money as a platform for innovation, and that it's more than just about solving problems. It's also about creating a platform for things we don't yet know we might do in the future. It's a bit like, I guess, the House of Lords Economic Affairs Committee recently published its report on its investigation, its call for evidence on CBDC, which it entitled CBDC's a problem looking for a solution looking for a problem. And I think if you go into things with that mindset, basically, that everything you do, every innovation that you have has to be a solution to an existing problem, well, then we would probably have very good washing machines and dishwashers and vacuum cleaners today, but we wouldn't have iPhones, because the iPhone, or much of the other technology that we use today, wasn't built because it solved an immediate problem. It was built so that we could do new things in the future. And so I think, collectively at the Digital Pound Foundation, that's why we very strongly believe that in the potential of digital money as a platform for innovation, and also as an important underlying component of the transition to a digital economy. So we've got 1 minute to go. I will hand over to Helen to wrap up, but thank you very much to all of our participants today. It was a really interesting discussion, and also great to have such a variety of different approaches and projects and opinions as well.
Thank you so much, Jana, for that fantastic chairing. And it's really only 1 minute to go, so it just leaves me enough time to thank all of the speakers. Thank you to John and Usman for their keynote. Thank you to Jana for your fantastic chairing of the panel, and to all the panelists for taking part and providing such interesting insights. And thank you to everyone for joining us. We will have a recording of this session available on YouTube in the next few days, and also a write-up for anybody who registered wasn't able to make it. So do keep the discussion going with us. The Digital Pound Foundation also has a newsletter that you can sign up to get information about future events. And we're going to shortly be launching a new events page on our website, where we'll be giving information about our own events as well as those of our partners, or relevant conferences that are going on now that conferences are starting to come back to life. So hope you will join us again for a future session. But for now, thank you to everyone who took part, and look forward to seeing you next time.